I don't like it. Let's look at fast. I'm already in fast. Oh yeah. Oh yeah. Okay. So you see this? This is an earnings play. This here is an earnings play that I'm willing to take on. Tell me why. Tell me why. This is an earnings play that I'm willing to put money on.
Because it's almost at the floor and it's below the moving average, so it has upside.
Okay. Anybody
Or I
else?
see that. Oh, good.
So it broke here. Let me take this off for a second. Let's look at the detail. Let's look at the detail. So last time it came to this zone, and this is a daily chart, it bounced up. Then it came down again, and now it's bouncing. Let's look at the 2-day. Yeah, this might be. Oh yeah. Of course, absolutely. So let me go to line. So look, right here, we're gonna put it right here. So let's go. This is a 2-day chart. Let me look at the weekly. Okay, so weekly, boom. That's even better. So you see the zone, right? Oh, I love this. See, this is a trade that I'm willing to lose on. I am willing to lose on this trade. Why? Because it meets my criteria. Like, why not? The only thing I don't like about it is the unforeseen when it comes to earnings, right? Because it can go either way. But if I'm playing earnings, this is the setup I want to get in to trade earnings. We are looking at the weekly chart and look at the demand zone. Look at the demand zone. We in the demand zone. We in the demand zone. Am I lying? Like, I'm not making this shit up. Am I lying? You don't see, look, price came here. Price came here. Boom, struggle, right? It was a resistance zone. Price came here, it dropped. Boom, like this. It was like, no way. And then price did what? Break and retest. This is a break and retest. And also, it's some sort of a cup and handle pattern. But I don't play those patterns like that, but I recognize them because like down here is like a cup, right? The bottom of a cup is like this, like a cup. And there's a handle of the cup here. That is basically the retest, right? So it broke that resistance, and then retested it, right? Break and retest. It retested it. It found support, and then from that support, it jumped up here. Now it's come down to that zone. What do you think the zone is now? This becomes a support zone. It's been tested 1, 2, 3. This is the third time. So we are hoping that it bounces from here and go back to the high. Oh, I love this. Ooh, I love this one. I'm putting money on this one. What y'all think? I'm putting money on this one. You either go and make money or you lose money, but I love the setup.
Block, I'm in 2 calls on that one from old plays that expire
Yeah.
7/19.
Oh shit. Yeah, you
Is
might
it
have to. Okay. So
roll it?
you're down, right?
Yeah.
Obviously. You're gonna have to average down. So you can average down, keep that same position, like the same date, and then get a discount and see if they beat is going. If they beat, you making money. But if they beat and you don't average down because the time, you don't have too much time, you got like a week left, you probably ain't gonna see too much on the upside unless it goes up like 20% or something. So the best thing, since you already invested in it, is to put a little bit of more money to,
Yeah.
see if you can fuck it up. And I mean, it can still lose, but the odds, it looks good, in my opinion. It looks good in my opinion. So with this, it's worth looking at the financials to see, because look at the 3 hour. Price action wise, I love it. I can't question it. I can't even hate it. I cannot not take it. Yeah, I could not take it. I could not take it. If that's a very proper English, but you know what I'm trying to say. I could not ignore it. Proper grammar. But look, if this joint pops, now if they fuck up, then I mean, so let's see. Let's go to 4 hour. Let's go to 4 hour. Last earnings, they missed. It dropped. Okay. Prior to that, they beat. But see, when they beat from this zone. Ooh, I love this. Man, check this out. Yeah, they beat. It was in this same zone the last time they beat. You picking this up? It was in this same zone. So last time, prior to earnings, look, earnings was here. What was the earnings date? January 18th, right? It found support right here. January 5th. So, oh, this is good. Am I tripping? Y'all ain't seeing what I'm seeing? Or am I tripping? This some good shit. If it popped, y'all think hey, look. This is patterns, right? That's memory. This is human behavior. Last time before earnings, it was right here, the same spot. Look. 60, it came down here, 61 right here. They beat earnings, and what happened? It went from here to here. Okay, so let's ask ourselves, and this is how you can choose your expiration, right? If you want to play it smart. So January 5th was when it found the bottom. The earnings date was January 18th. So from the bottom to the date was like a week and some change, right? And where did it find its peak? So we're gonna extrapolate here. So it found its peak March 22nd, which means January 22nd, technically you need to give yourself about 2 months. Do you get it? There's some heavy shit. Ooh, there's some heavy shit. But this will only work if they beat, right? If they beat, it's going back here. If it's going back here, what time frame should you give yourself to expect it to make it back to its high? I just gave you the date right there. You see that? Man, there's some good shit.
Is it 2 months?
Yep. 2 months. Because look, the last time it took 2 months from them beating earnings from this bottom here to here. It took 2 months. So technically you can give yourself actually 3 months. If you really want to play it safe, you give it until October, if you really want to be comfortable, right? Because if you cut it, but see, if the October, it's not gonna make you, September, October is not gonna make you as much money. You see what I'm saying? If you have a July 26th expiration or August 9th expiration or something, you will make more money if it pops. But if you want to play it safe, September, October, based on this. So now let's go look at some numbers. Let's go look at. So let's look at fast. Fastenal, this one. Fastenal. Let's look at their financials. Let's see if they making money or they losing money. So this is annually, we are looking at their net income. Net income, where are you? Net income. Total revenue. Okay, so we are looking right here, right? So 2020, net income, $859 million. 2021, $925 million. 2022, $1 billion, almost 1.1. 2023, 1.1. So they making money, they progressing on the upside. You know, let's look at them quarterly. Quarterly revenue. This so far this year. So last year around this time, revenue wise, they brought in 1.8 billion, right? Then in September, that quarter, 1.84. It went slightly down. Then December, 1.7 went down. And just the last quarter that they reported, March, 1.8. It's progressing on the upside. Yeah, this is an earnings play. There's no question about that. Everything checks. Now, if they miss, it's gonna drop. But if they miss and it drops, because we are giving ourselves 2 months out, and it's a solid company, right? With good numbers, it's a no-brainer. I like the price action better. So this is definitely, I'm in. Stick a fork in it. This a 5-star. This might be a 10-star play. If they miss it, then but with something like this, we can do a straddle where we buy a put as well. You buy a put and then you buy a call. And then once the call pops, you close the put. I'm getting in this. There's no question about that. So Pepsi. Let's look at Pepsi. Oh, we gonna eat. Man, yeah. Listen, do you see it or do you see it or you don't see it? Like, I ain't even did nothing yet.